A new trading week awaits right here on Wall Street, and after last week's rough ride, well, investors are hoping for a bit of an improvement, just a bit. And if you're wondering how rough was the ride, well, the big board posted its biggest weekly drop in nearly 2 years amid uncertain trade policy from the Trump administration. Stocks have been on a roller coaster ride this week with President Donald Trump's tariff policies worrying investors about future U.S. growth and inflation. Trump said on Thursday that an array of goods from Canada and Mexico that are covered by the North American Trade Agreement, known as USMCA, would be exempt from the announced duties until April 2nd. That move effectively walked back much of the original plan, but the market still selling off this week with uncertainty mounting amid constant updates and a lack of clarity around what to expect longer term. And then today, Friday, a weaker than expected jobs report raising further concerns about economic softening as non-farm payrolls increased by 151,000 in the month of February, less than the forecast of 170,000 polled by the Dow Jones. And the U.S. unemployment rate that ticked higher to 4.1%. But some optimism. A new week awaits. Will the tough times carry over, or will we see a return of market optimism? You know what? Let's go jump right into it and take a look at what will likely move the markets in the week ahead. Monday kicks off in Germany with the German January industrial production read, expectations calling for a read of 1.5% month over month. Tuesday sees the beginning of the Eurogroup meeting, and it also sees the JOLTS job openings numbers out of the U.S., a report that's currently at 7.6 million. Wednesday sees a pickup in action in the U.S. with the release of the February consumer prices report, expectations 0.3% month over month, 2.9% year over year, while north of the border in Canada, the Bank of Canada rate decision awaits, a rate that's penciled in to show a drop to 2.75% from 3%. On Thursday, focus returns to the U.S. with February producer prices on the docket, expectations calling for a read of 0.3% month over month, while on Friday the week ends on the busy side. First in Germany, the February harmonized consumer prices read that's due out, a report that's expected at 2.8% year over year, while over in the UK, January British GDP is scheduled for release, a rate that's expected 0.1% month over month. And then in the U.S., preliminary March consumer sentiment that's due out, expectations 64. And don't forget to keep an eye on more geopolitical updates as well as the rounding up of the earnings season, both of which have been major market movers as of late, especially on the geopolitical front. And until next week, coming at you live from the New York Stock Exchange, I'm James Sweeney reporting for ICF.